Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast Betwixtmas Special, Sunday the 29th of December. I'm Phil Carroll.
I'm Kevin Hornsby.
And I'm Charles Archer.
Yeah, I mean, how's life treating you both? I know, Charles, you've been through what is often deemed the most stressful experience in most people's opinions, a house move. How was that?
Do you know, it's not too bad. A lot of it is a fixer-upper. So I've spent the past few days fixing up my office. So I've plastered it, I've wallpapered it, I've painted it, put a curtain in. There's a light bulb now, which is nice. I'm not sure about the electric.
It does sound a bit bare. There's a bit echoey, so you need something.
Exactly. You need something on the walls there, I think, mate.
I've replaced the old floor with just vinyl, but I think you need to get like a rug or something. But the rest of the house is awful, but my space is now quite nice. So that's the main thing, all done.
Going for a Scandinavian minimalist feel at the moment.
I went for a white Dulux paint feel in every room so far. But, do you know, the thing is, I was saying to Susie, because I was talking about, because we were talking about doing this for ages, just buying somewhere we want to be effectively forever. And they were like, right, we'll just buy this house that needs a lot of work. And over time, it will just get fixed up. You know, it just will.
There's more fun doing it that way, isn't there? You can put your own stamp on it and do it as you don't need to rush it as well.
Yeah, I don't know. Obviously, we've got 3 children and dogs and cats, and it's just chaos, and it's Christmas and whatever else. But I think it's you know what it was? It was constantly pouring more money into our old house, which we weren't going to stay at forever. You know, so now we're done. Unless we move abroad in a couple of years, and then it will be a waste of time. But you know, who knows? Who knows what the future will bring? How are you guys? What are you up to?
Good, yeah. I mean, just you getting over the excesses of Christmas, you know, eating and drinking probably a bit too much, but all good. I mean, how's things with you, Kev, over there? Have you had an interest? I know they tend not to celebrate Christmas at the normal time. I think in Egypt they celebrate it. Is it the 7th of January? But I assume you've been doing a few things over there.
Yes, me and expat friends and associates, yes, we all celebrate Christmas on the 25th. So yeah, no, I had a Christmas dinner on the 22nd, I think it was, with my wife's family, which I do as a British turkey and ham roast dinner, and then we had a big ribeye roast that I did for the 25th, where we went. There was maybe 40 or 50 people, I think, at this thing. So we had like a buffet meal. It was good. Yeah, just I can't say of excess, to be honest, but yeah, and even Christmas presents and stuff. I came back. What was it? Something like the 10th of December with suitcase full of presents. Now the chances of the children waiting till the 25th was 0. So really, we had Christmas on about the 10th or 11th of December when everybody got their gifts and stuff. So, and my kids didn't anticipate they were going to get gifts necessarily yesterday, though we did get them some things. My son got a trampoline, and Emma got some other beauty stuff or stuff. So it was good, yeah. It's been interesting watching the football yesterday. I was glued to it all day yesterday. So that was a nice Christmas present for all Liverpool supporters, having watch Chelsea lose, watch Manchester United lose, watch City draw. How Arsenal are going to get on, because we're recording this on Friday. We will soon find out. So, yeah.
Very good.
Christmas is looking good at the top of the Premier League.
Yeah. So obviously in this podcast, we'll talk some of our picks for 2025. But before we do that, let's have a look at some of the news stories that have dominated the headlines. I mean, the big one has been, and we didn't really talk about this last week because Rick was on, but it's basically has been the developments in Syria. I mean, you know, we saw the ousting of President Bashar al-Assad. Israeli forces have expanded their presence along the Syrian border, seizing strategic positions such as Mount Hermon. Prime Minister Netanyahu announced that Israeli troops will maintain the buffer zone. The UN expressed concern. I mean, we've seen Israel attacking Yemen is there a country, I suppose the first question is there a country that Israel hasn't attacked in the last 6 months in the Middle East?
Egypt,
yeah. What do you make of Syria? I mean, this was the whole madness, wasn't it? Like Russia, you see Putin apparently calling him up saying you can come to Moscow or an area of Moscow. I mean, is this the start of the destabilization of not only Syria, but the further crisis in the Middle East?
It's not the start. It started in 2000. 2010 or 2011, maybe long before then. But yeah, I mean, there is no doubt in my mind that Israel wants a greater Israeli state, as in, expand its borders. It's not going to stop until it does it. And with the support of the US, it seems to be getting its own way. So we will see. Gaza, mark my words, 2 or 3 years, that's going to have Israeli settlements in Gaza, and they will have absolutely totaled it. If you see pictures of it now, it is a wasteland, a complete wasteland. They destroyed everything. Bulldozers are going to go in there, and it will start from afresh. Yeah.
I think it's effectively it's the Crusades all over again, but with modern weaponry, so much worse than ever before. And Israel will have an advantage for a long time, and then one day it won't, and then there'll be the pushback, as there always will be, and it'll just be more bloodshed. And I don't see a way for that to be fixed or sorted out anytime in the near future, if at all. So it's just desperately sad and not a particularly Christmassy feeling. But,
Yeah, scary bananas.
Talking of Christmas, who's played a marketing blinder this last couple of weeks? Well, no, it was actually something a bit more that they apparently they slowed production and then limited supply. And this was
maybe
Guinness. It was Guinness. Well done, yeah. I think who said someone at Guinness has made a mistake since we've worked with them for so long. We forgive them, but they better get brewing. That was our friend Sir Tim Martin of Weatherspoons. He was a right rant at them because he was trying to sell more Guinness. I mean, they played a blinder, didn't they? They almost created a bit of a deficiency or a limited supply, slowed the production, and everybody wanted Guinness then.
Well, it's funny, isn't it? Yeah, because there's always an old man's drink. That's what it felt like. To me, it still feels like in many ways. But it's funny how alcohol, just different types of alcohol, go in and out of fashion so quickly. And now that demand for it is going to be really strong for a year or two. So they should make hay while the sun shines,
It's become the Premier League's alcoholic drink is Guinness. And that Gary Lineker and Schroeder.
Isn't it? It's Guinness Zero that sponsors it, the zero version.
Okay. But they also brought this thing out, didn't they? That you can actually pour your Guinness at home now. They built this contraption that I presume has gas involved in it or whatever, or maybe it's the can on the way it's angled so that you get a good pint, if you like. And the Gary Lineker, Shearer, and Mika podcast is also sponsored by Guinness as well. They have a Guinness Minute on it. I listen to this all the time. The Rest is Football, I think it's called. Is it? Yeah. So every time I listen to that podcast, I've been hearing about Guinness. So even in my mind, I can't get Guinness here, obviously, but I'm thinking, oh, pint of Guinness would be nice. So yeah, they have played a marketing blinder.
Yeah.
And that usually
what I was going to say, I mean, the other thing is, like, if you get, like, Carling or whatever else it is at the football, right, it's not that special, whereas a Guinness poured from a tap, it's got that sort of magic marketing sort of, oh, we've got to put the clue, we've got to put that super hands for disapprove, but you've got to put the clover on the top, you've got to make it look all special, and you've got to pour half of it, or like 3/4, as we walk down working in the bar at some point in our lives, and then leave it on the side. Inevitably, it'll be the last drink the person orders, in the whole round.
There's something very nice about going to Dublin and having. I only tend to drink it if I'm in Dublin, because the pints you get there, it tastes so much better, doesn't it? I mean, when Kev and I visited Conroy a couple of years ago, and Kev doesn't drink often, and neither do I. But you've got to have a pint or a half of Guinness while you're in Dublin.
Yeah, well, it's sad, isn't it? Like, it used to be like, it's only back in 2015, 2016. I know it wasn't that long ago. The first 200 years, it was filled with fish guts in order to make it, and they've replaced it with a vegan alternative. And I don't know. I don't think they bring that the original fish guts formula.
They used to put the water from the Liffey in there, and you
connoisseurs. Yeah, it wouldn't surprise me. It is, the Irish.
Okay, so should we move on to some of our picks for 2025? Kev, do you want to go first with one of yours?
Yeah, let's take it in turn, one at a time. Each of us will pick 4 stocks that we think have got a good chance. I mean, as this market moves and as it changes, it seems that you pick a stock for the whole of the year. It's sort of things change so much in the small cap market that it's a difficult situation. Our picks last year, the 12 stocks of Christmas for last year, They're down about 17% overall. There was three gainers, and 9 and 2 or 3 of those were absolutely miserable. But we'll talk about those maybe in a different podcast when we go. But my first pick is going to be Power Metal Resources. I think it's very undervalued for what it's got. Obviously, its main constituent is, in terms of its value accretion, is Guardian Metal Resources. I'm not going to talk a great deal about that because I know one of you two have picked it anyway, but it has the tungsten. Big deal this year in terms of sort of 10 million is going to be spent on these uranium assets in the Alabaster region of Canada. Even one of those comes off and you're talking about probably worth 100 million, 200 million. And obviously Power Metals is going to be 30% of that. Also, Sean's made huge steps in the Arabian market, in Saudi, and that moving forward. So, I mean, we've talked about it in depth before, so I'm not going to talk a huge amount about it. But, I just see that from a value point of view, its whole value is around the GMET share price at the minute, and there is just so much potential upside with the different assets that they have. I know you're the expert on this one, Charles, so I'll let you wax lyrical for a minute just on it before we move on to your choice.
On Power Metal. Yeah, well, listen, I mean, you've got the second largest uranium exploration in the Athabasca going on at the moment, all funded through the joint venture. Multiple targets, all of them look relatively promising. You've got the stuff going on in Saudi Arabia that's not being, talked about that much, and the progress there has been pretty dramatic, and Power back at Riyadh, aren't they, in the new year, and then on top of that, going to have uranium assays drill result in hopefully earlier on in H1 next year, relatively soon, and then all the rest of the portfolio, including affect almost 50% of GMET, which is there have been points throughout the year where just the Guardian Metal shareholding has been worth more than the entirety of Power's market cap. So I've always thought this is one that's going to eventually recover strongly. Hopefully 2025 is the year. I guess I'll lead into one of my picks is Guardian Metal, and I've loved this story since the IPO. My basic premise on this is having now got picked up Tempe and then also already with Pilot Mountain having the largest undeveloped tungsten deposit on US soil on their books. You now have the situation between the US and China, especially with Trump in charge, where the US is desperate to get domestic supplies of tungsten up and running. So there will be significant grant funding coming in the very near future. That's my view. And that's going to obviously supercharge the share price. You also have shareholders like Pure Bond or a couple of institutions who have come on board. You have all these warranting exercises of companies in a strong place financially. And this combination of grant funding and strong institutional support just means to me that Guardian is one of the ones which is going to continue rising in 2025. I'd not like to put a price target on it, but I do think that Oliver's done everything exemplary so far. And once you do have that grant funding and you're putting money into the ground, there's it becomes very de-risked because it becomes of national strategic importance to the US, even with the tiny market capitalization that it has at the moment. I mean, what do you think, Kev? I mean, I guess you're kind of on the same page, aren't you, with this one?
Yeah, I was tossing up between Power Metals and Guardian in terms of which one I think could perform the best. I mean, I think it's a toss-up, really. I mean, because one is going to obviously help the other. But I see that all the different opportunities in Guardian Metal are worth hundreds of millions of dollars, and it's 100% owned. The new project, which I think will be probably confirmed sometime in January, February time, is going to be a game changer. I think the last podcast we did with Oliver, it really came out that, this one that he's going to buy, Tempe is actually going to be the first tungsten production, probably not Pilot Mountain. So this actually, I think, increases the speed that tungsten will come to market through Guardian Metals. So yeah, and if that share price continues to go up, and we have had a bit of a pullback at the end of the year, it's been one of the good winners of the year, isn't it? So people have taken a bit off the table, I think. It hasn't been for any negative reasons, that's for sure. That is going to power, but also you've got so many other things within power that could also have a positive effect. That, yeah, it's good. So what about you, Phil? What's your first one?
Yeah, I'm going for COBR Resources, and obviously we've had Rupert Vercoe, the CEO, on a few times in the podcast, and I encourage people to go back and listen to some of his musings. But they've basically sort of strategically de-risked the Boland project in South Australia, and what they've done is how they've done that is they've prioritised this sort of metallurgy first, where they've proven the deposits, the high recoverability and that economic potential ahead of the normal kind of resource drilling, which they're going to focus on now. So they've, rather than sort of proving up the resource, then developing like a mine plan or looking at the metallurgy, they've done the metallurgy first, and then they're now looking at the resource. So they've done the bench scale testing, which has kind of already demonstrated these exceptional recoveries of the ionic rare earth elements. I think they've got 68% for the magnet REEs and 62% for the heavy REEs. And they achieve that with basically with low acid consumption and minimal impurities, which obviously is a critical advantage for the cost efficient in what they call this in situ recovery mining. They're now advancing a fully funded 12,000 meter drilling program to define the scale and the grade. And they're just poised to deliver a maiden resource and scoping study by the end of 2025, and that's why I think it's got the potential to move based on this maiden resource, then the scoping study, and they've got this unconventional methodological approach. Then they've positioned themselves to unlock this significant value, which offers exposure to potential world-class, low-cost, rare earth project at a time of growing demand for these critical materials. So that's the one that I look at. And the market cap's around £9 million. They've as I said, they're funded now for this 12,000 meters of drilling, and then on to the scoping study. So that's the one that I've got my eye on initially.
Yeah, I definitely like that. My second one then, and we're staying in the continent of Australia, is Greatland Gold. Having
Never heard of them. Never heard of them.
Having spoken to Sean Day on a few occasions this year, and obviously it's been pretty momentous that they've managed to secure 100% of Telfer and the processing plant there, and obviously the main issue was Havieron, and they've got 100% of Havieron now. The revenue potential to allow Greatland to grow the resource at Telfer and bring Havieron into production, for me, is now a game changer. It's now a producer first and an explorer, but the issue is that it's going to be a funded explorer now. So are we going to have much dilution from this point on? I don't think so. I think it's going to be quite minimal. And therefore, the ability to extend the life of the mine at Telfer is going to make an enormous difference. And I think if that happens, and that is preceded then by Havieron coming into production then 2027, I think we're going to have a very good year ahead as people start to realize the amount of production that can come out of Telfer. And, you've got to be looking at a gold price now. I think it's $3,500 or more, Oz dollars or more for the gold. The all-in sustaining costs at Telfer at the minute are quite high, but it still gives them $1,000 per ounce of profit or runway, we should say. So there's just so many factors there that I think it is effectively undervalued for what is available, and the literally millions and millions and millions of ounces that are going to be available for them to produce. And they have upside, obviously, from exploration, and also there's exploration around them that is effectively going to be coming towards Telfer as a processing facility, is my view. So now I think they've de-risked it. They've managed to raise a huge amount of money in the London market, and they're going to be listing in Australia as well, which I think will be a real fillet during 2025. We look forward to speaking to Sean as we go forward, but it's one of my picks. Last year we picked it, didn't do so well. It's down about 20%. But this coming year, I can't see the same being repeated.
It's quite fun with Greatland Gold, the ASX listing in particular, for two reasons. I mean, the first is that if they're of a certain size, they get included in specific funds that drive passive investing and push the share price higher. And once you're in funds, it becomes quite difficult to drop out of them unless you make a big mistake. And the other thing, as you'll know, is franking credits and dividend investing. If Greatland starts paying a dividend, then the Australian investors are quite incentivized to buy the shares because they get franking credits. Effectively, they don't pay tax on the dividends that are paid out, unlike in the UK where we get clobbered. So, that ASX listing for them is absolutely crucial. And it might be the case that they're just waiting to get to a certain market capitalization before they do it to ensure they get included on the funds list. And looking at the quality of the management they've got there, and the pedigree of the management, they probably know exactly what they're doing in terms of getting the exact right timing. Because they're not a minnow anymore. We've been talking about them for years, both separately and together. And now they're getting into the big leagues, which are quite fun to watch.
Yeah. And the interesting, we had Rick Rule on last week, and obviously, one of his comments on there was that he said that the first 2.5 years of Northern Star was a wonderful example of management discipline. They didn't milk the assets. That's why I'm still in Greatland Gold. This is just not a stock. We're building a company here. So he was very complimentary about, as you just said, the management and the proven track record.
Yeah, I mean, for me, my second one is interesting. It's still gold, but other side of the globe in Greenland is AMRQ Minerals. They've just called first gold. They're getting an MRE upgrade from Nalamac. Again, exceptional management. Again, exceptional financial backing. It's smaller than Greatland at the moment, but I think they're going to make a significant amount of profit from around the middle of next year when they start ramping up production. And it's quite fun for both of these gold companies because, there's two, but Greatland is doing this spoke on wheels, this model of exploration across all of the paths, and AMRQ is effectively doing the same, leveraging its expertise for critical minerals and gold across Greenland. And you had this situation where, for example, Ashanti, Don, Sentiment bought out a lot of the kind of, not the majors, but sort of the mid-tierish gold miners are being merged and acquisitioned. And so there's space now where investors want to invest in the next one that's not a minnow, but has the ability to grow fast, And Greatland and AMRQ, both of them are in that space, and they're both on AIM, which is fun for us because, we get to watch real growth stories. And Greatland is going to shoot up and up now. AMRQ obviously has done really well too. Happy days.
Yeah, good choice, that AMRQ. And while we're on Greenland, my second one is GROC Strategic Materials. That they have the AMRQ graphite project, as I said, in southern Greenland. And it stands out as one of the world's highest grade graphite deposits, and it's got JORC resource of 23.05 million tons at an average grade of like 20.41% graphitic carbon, which equates to about 4.71 million tons of contained graphite. There's obviously the PEA underscores the robust financial potential. Pre-tax net present value of $235 million, an 8% discount. GROC in November of last year achieved a significant milestone. They secured approval for the exploitation license application from the government of Greenland. There's been a lot of, you've probably seen the news that they've got this, basically the first time that tourists can go into Nuuk now, so that they're sort of starting to build, trying to bring tourism into Greenland as well. And I think just GROC's sort of positioned to become a key player in that graphite market. They also announced that they'd engaged with major automotive manufacturers such as General Motors to discuss the potential of AMRQ's high purity graphite in EV battery applications. And I just think the valuation, it's very, very lowly valued. So I think it's got potential in 2025 to move on.
Yeah. Well, I mean, it's the thing. Again, that deposit is right next to AMRQ, and these graphite deposits in general, I think it's quite fun with the export bans coming out of China and the effect that they're starting to have. Obviously, we've got Sovereign has a massive deposit, but then you have Blancow as well, and then GROC. But then actually, ex-China deposits that aren't controlled by China are now actually high quality, like vehicle grade quality. There's not many of them. And if the Chinese supply taps get completely switched off, which is completely possible, suddenly there'll be a mad scramble. And you're starting to see this already, because as China continues to tighten its critical minerals exports, you're now finally 40 years too late starting to see the Western markets go, hang on, we won't be able to have electric cars if we don't have graphite, or nickel, or lithium, or whatever else. Where are the best deposits? Generally in Africa and Greenland, right? The untapped deposits, and China's got most of them.
Well, we just saw news, funnily you say that, Donald Trump is trying to buy Greenland.
Yeah, no, I was going to say that to you. So Donald Trump moves in and takes over Greenland. What's going to happen to GROC and AMRQ, guys? This is the question. Are they going to be a US state by the end of this year? Because if they are, or by the end of 2025, then you'd have to say those two projects would significantly increase.
I don't know how delusional he is.
He's threatening Denmark. He's basically Denmark and now shoring up the defences.
But they were doing that already, so maybe it was about... I read the BBC News headline, right? It was like, Trump threatens Greenland, so Denmark's earned $1.2 billion. And it's like, in my mind, there's two things. $1.2 billion is like what America loses off its like defense spending in about 3 minutes by mistake. But it's this idea, oh, we want the Panama Canal, we want Canada, we want Greenland, we must have these things. And obviously he's not actually, I say obviously, you can't tell with Trump, but he's not actually going to go in and take Greenland. But what he's saying is, this is where our secure critical minerals are going to come from, right? I think this is like a key thing for me. And this isn't just particularly just AMRQ or GROC or any of the other like listed companies there. The actual land mass, it's relatively easy to develop. A lot of Greenland, there's no wildlife, so there's very few environmental factors. And it's just effectively, it's safe from a grip of China. So it's something that everyone needs to be keeping an eye on. But I think it's going to be interesting. Everyone on the mining one of the speculative Greenland is where the next Boyleys Bay is going to come from. Obviously, it's just across the Labrador Sea in Canada. And America is looking for these next big mines. They're trying to get them developed. And Trump was even talking about sort of just allowing mines to get developed without a due diligence process. Like the Resolute mine in Arizona, it's been delayed for about 29 years or whatever it is. He's just said, we're just going to build them. We're just going to not worry about environmental permits. We're just going to get this stuff going. And I guess that's the other thing. Like America is the largest producer of oil in the world, which might surprise a few people listening, but this is completely true. And they've also got some of the largest deposits of critical minerals in the world. It's just delayed getting them into production. And I think Trump now is looking at China going, hang on, we just need to get cracking. And he's going to do it. He's going to start building mines.
How many environmental delays do you think there are in China?
Well, one, do you want to build a mine? Yes. Done. But yes. Pretty much nothing.
Get on with it.
Let's get cracking, yeah.
Okay, so moving on to my third one then. First one having been a multitude of different resources. Second one, gold, copper. Now we move on to copper, gold. My next choice is in Namibia. We visited this place in, I think it was February, was it, of 2024. Great experience, I have to say. We went to the Hope and Gorup prospect in Namibia, and yeah, they have 190,000 tons of contained copper, all on JORC reserve. It has a £3 million market cap. It just raised £550,000. They're just a few days before Christmas for the Hope and Gorup project. It will also have a big push effect on African Pioneer, which has the Ongombo project, which is also gold or copper gold in Namibia. And those two will affect each other in a very positive way, I anticipate. I mean, I think Charles wrote about this one not too long ago. I think we were talking about $20 million per annum free cash flow, and probably within 18 months. How on earth this can be worth 3 million market cap when it's now got some cash? Obviously needs a finance package involved as well. But yeah, I don't see how this one isn't going to do well in 2025. I really don't. I mean, well, it's got a project also in the Far East, which is probably worth more than its market cap that it holds a small part of. So yeah, I really do think Bazant Resources is going to do extremely well in 2025.
I think it's one of these things, right, with this market that we have, whether it changes, I think the big sort of artificial intelligence, big tech, cryptocurrency bubble will pop again in 2025, and a lot of that money will hopefully start to flood back into the small cap market. But if we continue as we are for another 12 months, and let's hope not, you need to have either a path to revenue or very, very high grade assays. We're talking junior resource. And that's pretty much it. Those are the only things that kind of matter to investors. And so when you're looking at Bazant, we were talking about that potential free cash flow, 20 million, potentially significantly more. And it all seems very profitable and very exciting. But it all hinges on getting a strategic partner to come in and put up the initial capex, which, again, I mean, I've estimated this is not going to be very much, somewhere in the region of 10 to 20 million US, maybe not even that to get started. And so it's all going to be the case. I agree with you, Kev. I think this is about can Colin Bird, who's in charge of the company, get a deal signed and over the line. Because I think once you have that, then you can then look at the timeline and go, look, we've got the money in place. This is what we're going to do month to month. And then you're going to have a specific quarter where you go, right, we're going to start making revenue. And then the market cap will respond sharply. I hope so anyway. I think just in general, the market cap is so low that it's a good, for lack of a better word, punt, regardless, given they've now got cash in the bank anyway.
Yeah, and I mean, even if the JV came in, and I'm not sure it will be a JV in the simplest way, but let's say it did, and it was, say, a 70-30. 30% of $20-30 million a year, because I know your figures were much higher than $20 million, is, $6 to $9 million of free cash flow a year for Bazant for a minimum of 10 years and probably longer. And it has a market capitalization of £3 million. Well, that doesn't make any sense in any financial, and that's without copper, because that's another story that we'll maybe talk about in another podcast. But, what is the story of copper? We did take a jolt up and then came back down again, and we're sitting around the $9,000 per ton of copper. I don't think it's going to stay there. I think it's going to get higher over the next few years because of the gap. But yeah, so give us your third one then, Charles.
Well, I guess if we're in Africa, we'll jump over to the DRC. I guess my third one would be road resources. Again, none of these are any particular order, and there's a few more we could name. But Rhone with Busy North. I mean, for me, it's right next to Busy, which is the largest and highest grade tin deposit in the world, which is producing. It's got a $1.3 billion market cap, its neighbor. And you've got the same exploration team. They've got an amazing tin/copper asset that they're exploring in Busy North. They've got 4 diamond drill rigs, and they just had a $4.2 million strategic investment from Stanvic come in, so they don't have any financial worries at all. That plays at a premium as well. And for me, I think this is the thing is, when you're talking junior resource, I'm talking, you're going to have you either have to have a revenue or really high grade assays. I think Rhone will deliver over the next 6 months or so very high grade assays, which deliver the shareholder value that people are looking for. And the things of the DRC, I mean, I don't know if you guys have ever been out there, but you literally trip over the metal like it's sticking out of the ground. And the only risk that you have tends to be regulatory, but they have a management team that operated successfully in the country for the past 30 years in various guises. So I just have no concerns with it. I think it's one of the best exploration plays out there at the moment. But yeah, I don't know. I think time will tell, and you are at the mercy of the drill bit. But you simply have this wonderful, wonderful asset that they're exploring. And my hope is that as the assays start to come through over the next few months, the share price should turbocharge. But again, no reward without risk. I guess it's the same with all of these. What about you, Phil? What's your third?
Well, yeah, I mean, not too far away from DRC, over probably a few hundred miles away is Malawi, and obviously we've talked in the past about sovereign metals. I think it's still a compelling investment for 2025 and beyond. Obviously, they've got the Cassia project, which is emerging as a world-class resource for not only rutile that we've talked about in the past, but obviously the graphite being the world's second largest graphite deposit. Basically, they've done the bench scale MET studies on the graphite, which have demonstrated exceptional results, producing a high purity coarse flake graphite product that meets the battery grade specs. And obviously that's a key milestone there for obviously, you know, as demand accelerates, as we just said before, for lithium ion batteries. They've got the pilot plant operations, and they've been successful in terms of the, you know, for the rutile, which have obviously validated CASIA's ability to deliver this premium quality titanium feedstock. And obviously they've got this all backed by Rio Tinto's strategic partnership. So that they're progressing towards the feasibility studies with this robust technical data. And I just think that the potential there for the whole project to become a low-cost, sustainable supplier of two critical minerals, you know, with this ESG-friendly rutile and then battery-grade graphite, positions Sovereign well to deliver substantial value as demand for this green energy materials, you know, continues to rise. So that's what I'm looking at. Obviously, it's done pretty well in 2024. It all hinges now on, you know, obviously moving towards feasibility and whether maybe we see some sort of offer tabled by Rio Tinto. You know, hold that thought.
Oh, come on. Rio's going to pull out the checkbook, aren't they? Every time Sovereign dilutes, you know, a small amount for any reason to pay legal fees or whatever, Sovereign buys a few more shares on the market to keep their 19.99. Yeah, I think Rio's just going to pull out the checkbook. I suspect this year, I reckon relatively soon. I don't think it's fair to like speculate on exactly what the number will be, but it's going to be a premium, a significant premium to what we have now. And then songs and daisies, and then the team. I will say this. The team behind Sovereign, I'm not going to name names, you know, but they're quite easy to find out. They just keep finding great deposits and making loads of money. So it's also well worth, when they go to the next one, which they will eventually, keeping an eye on that.
Yeah. I think it's an interesting one, Sovereign Metals, because I've spoken to investors, and they are sort of the mind, well, that's a no-brainer. It's going to work, okay, and it's going to go up, okay. But why isn't everybody rushing in and buying it then if it's a certainty? Well, the funny thing is that it's sort of risk reward. How high can Sovereign go? Okay, now if Sovereign suddenly decided and said, we're doing this ourselves now. And yes, you can come along as a shareholder if you want, Rio Tinto, but we are going to actually try and do this ourselves. Then the upside is far, far higher.
But so a psychological barrier with the share price as well in the 30, you know, in the 30s and 40s. If it was a 0.01 stock or a 0.1p, then, you know, we would have seen Prem style rises from through 2024. I think there's a lot of, we've talked about that in the past, and I think there is a lot of psychological barriers there. People buying into stocks in the 40 pence can sometimes have a bit of a negative effect on it.
That's right. You can spend $3,000 and buy, or $2,500 at this moment in time, and buy 10 million Bazan shares.
I don't know. It's funny. Like Warren Buffett, you know, he's not. I'm not exactly short of a few eggs. I mean, he keeps the Berkshire Hathaway share price high to prevent shorting, because it's difficult to buy them to short the company with. So that, you know, it swings and roundabouts. If you have a higher share price, it's hard to short the company as well. Because, you know, you said, but on the flip side, if the share price is lower, then you tend to get more buyers. But I think Sovereign is criminally undervalued. I think it's one of the ones which is, we talk about like risk, we reward. I think the risk there is very low, especially now they've proved the graphite. So now it's just the case that Rio Tinto just pulling up the bloody checkbook, writing a big number with a load of zeros, and then we can stop working on this one and do the next one. But, you know, I hope not. I hope they do their own thing for the next 5 years and keep talking about it. But
so do I. Because I think it'd be better for everybody except for Rio Tinto shareholders, probably. Yeah. Okay, my fourth one, and that will make up the 12 that we're going to choose here. And as Charles has already said, I think there are multitudes that we could add to this. And there is going to be another podcast next weekend, which we will talk about all the stocks we didn't talk about today. But my fourth one is MAST, energy-driven peaking stations in the UK, desperately required. You know, if the wind blows too much, then the storage isn't there to store the energy to allow the grid to be on a level playing field. If the wind blows too little, there isn't enough energy, full stop. So these gas peaking stations are required. This time last year, MAST was an absolute basket case. Since then, we've had River4 come in and rescue them from the point of view of going bust. still a company that's only worth about £750,000. We have Piebridge, which we visited, which has now improved 2 of the gensets. The 3rd genset is in the process now. That will give it, I think it's 9.1 megawatts. They've just done a deal with another very large company, which is going to allow it to progress its other assets and help finance them there. And they've also signed an agreement, I think, with Riverfort to progress purchasing other units to allow them to move rapidly towards 300 megawatts, which is the goal. Now, I think that's a couple of years away, but now this is on an even footing. It should be profitable in 2025 and move forward. And it's not going to own the whole things, the whole of these units, but even 20-30% of these units funded is going to be a very steady business. And for it to only be worth what it is now, I think it's got potential to have quite a few bags in terms of its return in 2025. And now it is on an even footing. Before, major risk. And there still are risks. Things could go wrong. But there are so many parts of the jigsaw now in place. I'm pretty confident that 2025 is going to be good for MAST.
You got the number 4 then, Charles?
For number 4, I'm going Jubilee Metals. The problem that Jubilee has had over the past few months is that a couple of funds have been selling out of the stock. I think that's very clear now. And the problem is that when a fund wants to raise like cash, and it's got a lot of the liquid stocks and investments on its balance sheet, it has to sell the ones which are liquid, which Jubilee is. And that's had a huge amount of pressure on the share price. And then the second problem that you have is the weather in Zambia, right? Where a lot of the growth is coming from, where you've effectively had drought and where a number of companies are still drilling, into late December, where really we need a really big rainy season. And this is having an issue with, power requirements with which, Jubilee, to its credit, has done a lot of work signing private power agreements and doing its absolute best to deal with the situation. But I'll note that both of those problems are external to both the management and the fundamentals of the company. Those are things that, anybody in charge can do anything about. If you're a publicly traded company, then sometimes a large shareholder, an institutional shareholder, will sell your shares. And sometimes the weather isn't going to be conducive to growth. However, we're now at a point where JLP has a market capitalization of around £113 million and a share price of about 3.8p. This is ridiculously low for a company that's the growth that it's had over the past few years. And I think that it's just an absolutely superlative long-term opportunity. I mean, Kev, you were talking about how it's difficult to make a stock pick for like an entire 12 months because things change, and I agree with that. But I think a 3.8p JLP is going to deliver quite handsomely.
I agree with you. I think obviously we visited Jubilee places a couple of times over the last couple of years. They've had problems after problems, and the rain and lack of electricity, obviously in Zambia, has been one of them. The good news is that in South Africa, they're not having any of those problems, and their South African operations are booming. So this is giving them a good opportunity from a cash flow positive point of view. And don't forget, they've internally, the vast majority of the money, they've internally funded all of this growth themselves from what's happened in South Africa. Is it worth more than just over £100 million? Well, you go back only a year and a half, and I think it was worth 250 to 300 million pounds. So the scenario is with the IRH deal and the Waste Rock project, which is in Mufulira in Zambia, with what's going on at Rowan, with what's going on with the mines that they're now bringing their own resource to take the copper out of it. And they've done some pretty good deals in terms of getting those resources in place. Yeah, I can't really see that they're not going to become more profitable. I can't see how.
Just more delays. The risks are more delays and more
delays. But I think
that's what's plagued the share price. Frustration from shareholders.
Yeah, and I think the downside is if something materially happens in Zambia, presidential, they decide they want to grab assets from companies in Zambia. I mean, all of these risks exist. But good for
Happen in
it.
2025 with the change of the president. We know that's going to happen in 25. So there's risk to everything, and that's what you.
The thing is, I think with Zambia in particular, I can't speak to South Africa. I don't know the country well enough, being honest. But with Zambia, they back in the 2000s, they effectively they lost Anglo American, left the country. They lost, and the Konkola copper complex. And they lost and they lost and they lost, and the country's economy went into a massive quagmire. And then they realized, no, we need to have fairer, sensible taxation and fair, private ownership of assets. The investment has come flooding back, and the country's doing much better and will continue to. So if they go down the route of effectively nationalization or grabbing assets again, the investment will leave and they'll be worse than when they started. And they've learned that lesson really recently. Always there's going to be yin and yang, right? There's going to be pushback and pullback because, being honest, most of these countries are very poor and they want to see, effectively, they want to generate more wealth from the mineral reserves, and there's nothing wrong with that at all. But there needs to be a balance. And I think Zambia, like a good point to make with the country is that the president, they were originally talking about effectively taking a stake for free in various assets across the country. They realized that wouldn't work. And now they're creating a framework where any new mining license is going to involve the state having a partial ownership. But anyone who already has one is grandfathered in and they won't be affected. And that's the way forward. That's the way, a modern country does it. And hopefully, when you're looking at Jubilee and the amount of processing power they have in copper in Zambia, get the energy problems properly sorted, and they've already put a fair bit of effort into it. And I think they're going to make a significant amount of profit. And that's before you talk about if the chrome and PGM prices recover significantly, which chrome's doing well already. I think PGMs are going to start rising relatively soon as well till they've hit the floor. And at the market cap it has, and the assets that it just has on the book, I think it's going to do really well this year. I cross my fingers anyway.
Yeah, I mean, asset-wise, it's worth more than its market cap. There's no doubt about it. 100%.
Yeah.
So, I mean, if you look at it, something that you want to be asset-backed, it has assets well in excess of its market capitalization at the minute. I think it's going. If it stayed the same, my prediction is that
Someone might snap it up. Yeah.
It will probably have more profit than its market cap within 18 to 24 months per annum.
I think it's getting that jam out of the pot now, though, isn't it? I think there's trying to think of the words. There's been delays and there's been more delays, but I feel like you're there now, and you just need, really, honestly, you just need it to rain. You just need Zambia to open up.
Yes.
You need 3 months because you've been there in the proper rainy season, right? And you can't see your hands in front of your face. It's insane. And yeah, and this is what it needs. The country just needs it to rain for the next 3-4 months and all drilling to stop. And there to be no news flow for anyone out there. And then when we come back, everything will be fine. That's what we need.
Yeah. Equatorial rain is required.
Yeah.
Okay, Phil.
Yeah.
Your last one.
This couldn't have been timed much better, really, because the company is actually listing tomorrow. Priority AI, they're going to list under the ticker PR1. And obviously, we've seen, some AI stocks that have gone from strength to strength based on, tangible earnings, and Priority has customers already. But this one could, do well in 2025. They've got the flagship platform, which is the Priority Advisor, which sort of addresses governance, financing, brand management, and marketing for SMEs. And they've also got launching the Spotlight range of product in 2025 in the first half, which is going to be for social media content creation, tailored for businesses, building posts on Instagram, X, Facebook, etc. Then they've got Priority Ventures, which is going to be investor engagement tool with trackable data room for sort of content sharing, research, sales scripts, teasers for investors. Priority Amplify will also launch in 2025, which is going to be sponsorship marketplace to sort of match businesses with brand building opportunities. And then Priority Sandbox as well, which is going to launch in 2025, which is going to be sort of for corporate governance and shareholder management, sort of live stakeholder data for resolutions, compliance calendars, and electronic attestation. So I think there's a real market opportunity there. These tools position Priority at the forefront of the AI-driven business support and engagement space. And I'm excited about it. Obviously, Charles has said that there could be a bit of a bubble burst on AI, but I think we're really just beginning to start. We've seen, big stocks in the US move. Maybe some of them in the US are overvalued, like the likes of Nvidia and some of the Magnificent Seven. But I think in the UK space, it's going to have a valuation of around the sort of 12 to 13 million cap. It's already there with customers on board. So that's my fourth pick.
Now, I will say on like that AI bubble pop that, just let's compare to the dot-com crash, for example, billions and billions of dollars and, lost apparent paper value. But there are also a lot of winners created out of that. And also, I will say a healthy bubble pop, Priority AI is a good business model and it can generate revenue and be profitable and do well. And plenty of, smaller US AI backed companies will benefit paradoxically from the AI pop because all of the capital that's locked in these large cap stocks hopefully will start to flood down to the growth companies. Because growth and value has suffered a lot in terms of stock market segments. And when that changes, hopefully we'll do much better. And also, related but not exactly, so obviously we've had a kind of a weak IPO market over the past couple of years. It's because there's no capital being driven to new companies trying to list because it's all at the top. And so when that bursts, hopefully we get some IPO activity and also more liquidity in the AIM market. So it will be good news overall.
Very good. Well, there's our 12 picks. And ultimately, I just want to say for transparency that this podcast does contain paid promotion.
Yeah, it's an interesting list. What missed your list is the last question I'm going to ask. And don't answer that question because next Sunday, we're going to go through all the other companies that we think, they could do very well in 2025.
Yeah, so obviously, thanks for listening. We hope you've had a great Christmas. And if you like what you've heard, please do subscribe. Hit the subscribe icon and the bell icon as well for any further notifications of future episodes. And have a great rest of the Christmas and a prosperous new year, everyone.
Thanks for listening, guys.
Cheers, guys. Bye.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.